Good morning, Transformers. This is Erixus82. I am going to be covering Amazon Monday morning, starting pre-market. This may roll over into the opening bell. So I'm also going to be covering a little more Elliott Wave than I usually do because this is one of the stocks that I trade, and I do watch it pretty closely. I've not traded it a ton since the split because that really killed the fees on options, but it's still a good stock. It does have a lot of price movement in it, and we actually nailed a banger on Thursday before the market closed, a 300% winner with a lotto. So I'm going to try to do some more of those for our members. You can always find those in our Discord. You can sign up at our website in the links below, or like and subscribe. I'm going to try to start dropping some of those onto our YouTube channel, provided there's enough interest for it. All right, so first of all, we're going to figure out what's been going on in Amazon on the macro view. We have a long period of, well, it's what looks like accumulation, but before there was a split, this was a pretty big range, up to about $100 and down to about 10. So then obviously we've had this big run. What we see, this movement here looks like some kind of a sideways running flat 4, which puts us into a fifth of some degree, and we appear to have an ending diagonal that failed to make a higher high on the 5, and then we've had this fantastic collapse. The other possibility that I see is that this was some sort of sideways correction. Either way, it still ended in some kind of some sort of a diagonal to finish this move, of which we get a complete and sudden retrace very aggressively. So it does adhere to what we're expecting from Elliott Wave, and I think that I like that the best. It fits a little more, and this is a really aggressive move, but this fits a little more with just the right look to me. And this could be the same degree as this, and this could be something lower. So the relevant part is what is happening now. What I like to do whenever I'm trying to figure out a really tricky Elliott Wave count is I use my line tool, and then I look at what we have with just the lines. So here we have zigzag, correction, a zigzag, a correction, and a zigzag. They measure quite well. The W to the Y, just a little longer than 1.27. The W to the Z is right at 1.27. So this is really, it's a well-measured triple zigzag. The main problem that I have with it is I tortured the wave count a little bit to get there. This one is the hardest. It does look 3 waves naturally. I think there can be a leading diag, and then a 4 in here, an extended fifth, or there's a 4 with a failed 5 here. So this one looks right, but this is, to me, a pretty clear impulse. And then this is also a pretty clear impulse with an ending diag right here. My other problem with this count is that we have what I can only see is a zigzag coming off the low. This is some sort of a corrective move. If it's a triple zigzag, we are out of options and the correction is over, and this needs to be impulsive. So it is a strong move up, but it is a strong corrective move in my opinion. You really have to dig in on like an hourly chart, which compared to the daily, the degrees don't look right. You be getting a 1, 2, 3. So a correction that took 8 hours compared to a correction that took about 2 weeks just isn't the right scale for me to call that an impulse up. So I do not think this is the way to go, but I mean, I could be wrong and we could be full on bull from here. But what I see as more likely is we have impulse, correction, impulse for a W. We got a flat correction, impulse, correction, and we have started on our next impulse down. I would expect a target of about $60. I would really like to see it sweep both of these just for the last strong move down and then a rebound really fast. This $60, if I had to pick a spot to go all in on Amazon, that's where I would go all in personally. I'm going to switch over to my pitchfork analysis now. I do have several videos on our website if you want to check that out. The link is below. So I do always like to find the right original pitchfork, which contains most of the price action. This one is very good. I'm not using any alternate pivots. 0, 1, 2 for my pivots. It's reacting well. It hovers around the median line everywhere. Both parallels are respected. The other thing that I see that is interesting is you get the drop. It comes out, drops again, it comes out, drops again, comes out. And we are just sitting right outside of it right now. So I am looking for an aggressive move down. Counterpoint to that is it is becoming slightly less aggressive on the drops each time. Here we had a drop that failed to reach the outer parallel. Here we exceeded the outer parallel and we're back to failing to reach the parallel. So I think that it may be slowing down. What we nailed with our Discord members the other day, within 10 cents of the low on Thursday's session, whenever it came back, we got long and we were able to ride this up. Bought the options at about 20 cents and they peaked at about 85 cents. I got out at around 55 cents because I realized midday that it was the last trading day of the week because of the Good Friday holiday. So we stayed very aggressive with that. We had an opportunity to add and get more money on the table. And I had a third opportunity, and because the third opportunity was when I wondered why prices were so cheap and realized that we only had a few hours to finish this trade. So what I'm looking for today on the daily, we're going to start out again. This new candle is going to open around 101, which is lower than Thursday's close. So that is in no man's land for me. I either want to see it come down to test the 100.41 area for support, and I would look to go long there again for a scalp day trade type option. The target's going to be around this 105 area. If we do not drop, then I'm perfectly fine with missing this move from 101 to 105 unless I see something present itself on a lower scale. I'm really looking to get short around the top edge of this trend line. I think this 106.40 would probably be a good area to stop in. It's probably something like that for a stop area. We're going to be on today's candle here. Yeah, so looking for shorts around 105.50 probably, and give it up to about 107, some breathing room. That's 30 or 40 cents of value change in your option, maybe 50 cents, so $50 per option that you could lose. And these aren't going to be too expensive of options because we're going to be looking for targets down below 100 probably. So that would be the trade I'd look for. I would definitely take some short-term options expiring Friday and maybe a few longer-term options with a month to try to get down to this $60 price range. I do not see this as resolved. It is one of the major companies in both indexes. I think if it's going down another 40%, the indexes have some distance to go too.